Good evening, everybody. Welcome. This is Patrick, and you are trading with Prime. Welcome to the new YouTube channel, and I want to thank each and every one of you guys for making this transition with me. I do appreciate it. Feel free to invite anyone that you think could bring value to this channel as we begin to allow it to grow and help as many traders as possible. So today I want to talk to you guys a little bit about precious metals. I want to talk to you about the dollar, and I want to talk to you about the stock market and how the Fed is affecting the stock market. I'll keep it very brief, simple, to the point. I've been seeing this on a lot of posts lately. I want you guys to take a look here. We are on, okay. I want you to take a look here. This is the Fed's balance sheet, okay? And I'm going to scroll down here. There's a couple things I want you guys to notice here and take a look with me. We can see the S&P 500 throughout the years just kind of raise its prices, trade sideways, raise its prices some more. We see a pullback in 2018. I call that the 2018 flash crash. That might be the name of it. We did see a lot of movement in 2018. And then we saw kind of a rally. This was what was known as the repo overnight sessions to almost to the point where, are we in a bubble comes to mind. I can't say that we were, but that came to mind at the time. I remember trading this portion of the year, and eventually we saw the bond market, which I'll show you guys in a minute. The bond market starts to take a dive, followed by that coronavirus comes in and takes us down. So the bond market picked it up first, but also what I want you to focus in on here is the QE. QE4, okay? We're entering in a new era of QE. It's almost hard to imagine for a minute there, but that's what's going on. You see the prices of gold and silver rallying. You see the dollar falling. That is what QE4 is doing. Let's scroll down some more here. QE4, again, first week, 0.8 trillion. We're gonna be passing 1.2 trillion, and we're gonna continue up here. It's a dotted line because it hasn't happened yet. And so what I want you to take a look at is this statement right here. Says the Fed has announced it will continue QE4 as long as necessary to support markets. Treasury purchases are likely to surpass $1.6 trillion. Well, what does that mean exactly? Because they don't exactly print cash like they used to. We see the value of the dollar go down. We see gold and other precious metals go up. And which this video is going to be about is I want to take a look at what the S&P 500 is going to do, whether it's going to go up or go down. Okay, this is a really good website to go to. It's good to check through and see what, the sources that we can dig up. I hear a lot of people talk about this. I hear a lot of traders bringing it up in posts. And I also at the same time hear a lot of traders think that the market is going to crash. And that's possible. It could crash, But let's take a look at the charts here. So we already did the analysis a few days ago. Actually, that was yesterday. We did the little market analysis on where I believe the market is headed. And so I've said this before, and I'll say it again. And I'm not going to go through the whole recap. Check out yesterday's video if you want to take a look at that. As long as we remain above this line, and don't get me wrong, I mean the line could be down here. As long as we remain above it, it's a buy the dip market. Until it's not. Until we see price fall below, back test, and take out the lows. This is a buy the dip market and will continue being a buy the dip market. I'm not saying Monday won't be a down day or even Tuesday or all of next week, but as long as we remain above these prices, and as long as we remain above these prices, we're good. Now, a little trick here. We're going to go into the charts and we're actually going to go to studies and we're going to add, I've already set it up here, but I want to turn it on just so you guys can kind of see this. I'm going to show the study on this one. The magenta, purple, pinkish line, I don't want to call it pink. That's going to be GLD, okay? And then I'm going to go down to UUP, which is the dollar. I'm going to say show study, and that's the blue line. I'm going to hit OK. I'm going to say apply. I'm going to hit OK. Auto arrange. Let's change the date a little bit. Bear with me for a second here. And this is very important. This directly affects our trading because I see a lot of posts specifically talking about this. Okay, take a look here. Let me change the date one more time. Let's go to 9 months. Daily chart. There we go. Okay, just so everyone can see this. Now, if we were going to do ourselves a favor, we would go look at the actual gold futures charts. We could also look up GLD specifically. I know the numbers aren't exact, they're not to the penny, but this is more about concept and principle. So as you can see, this blue line represents, that I'm highlighting, represents the dollar index, okay, against other currency pairs. But it's just out of principle here. We see the dollar selling off. The Fed is printing money. Something I want you guys to take note of, if you actually did this comparison and go back all the way back to the financial crisis of 2008, you'll notice the different markets turn at different points in time. The dollar is going down, okay? It's changing the ratio on what it costs for assets. So you see gold going up. Same thing for silver going up. Why do people believe that the market is going to go down? The reason why people believe, and I'm speculating here, the reason why people believe the market is going to roll over is because gold and silver are going up, and that's the flight to safety. Now, I could also throw a comparison in here for the bond market, which will be a whole another video. But right now, I just want you guys to see, we see the gold market rallying, we see the dollar going down. People are like, oh my gosh, where are stocks headed? Well, they could go down or up. Just because the Fed is expanding its balance sheets doesn't mean the market can't go down a little bit. We could see like dips and valleys along the way. However, as long as the Fed is printing money, the market's going to go up. You guys saw the chart. Let me go back to the chart. Now here's what I want you to focus in on. The stock market right here. Here's the crash. After the crash, actually, the Fed started printing money here. The crash came. The crash bounced. The bond market, you don't see it on this chart, but the bond market started rallying before stocks, which hasn't happened yet, which is kind of a mystery right now. Okay. But as long as the Fed is printing money and expanding its balance sheets, the market's going to go up. Okay. Unfortunately, that also means cost of homes are going to go up. I mean, if you're a landlord, that's great news. If you're a tenant, not such great news. So those are things to consider. Another thing is this. It's okay to see gold pull back. It's okay when it gets up to its all-time high again, which depending on what chart you're looking at, whether it's the futures or whether it's GLD, depending on what you're looking at, I'm expecting a pullback in gold or possibly consolidation and then even further higher prices. Absolutely. I do expect the dollar to continue to fall and eventually bottom out. I don't have right now, I have the percentages pulled up, but I do expect it to bottom out and then I'll possibly a bounce. And just know this, as long as the dollar is falling, what is that good for? That's great news for stocks. Okay, so keep this in mind in the next 2 weeks. Just because the Fed is continuing QE does not mean that gold is going to continue to go straight up. Okay, there's going to be pullbacks. There are going to be chances to enter the trade. Don't FOMO. There'll be opportunity. And the last thing is this, and I'll say it one more time. The market could be down here on Monday. And that's the job of the market. It's to put as much fear as possible into as many traders as possible. A good place for institutions to buy the dip. Okay, so just keep that in mind. Thank you guys. Check back in with us on Sunday, 5 p.m. Pacific Standard Time. We're doing our live stream to give you guys an opportunity and a chance to ask questions. Pretty soon we will be doing, I'll be doing videos throughout the week, mainly on Sundays. That's the day that I want to get together. That's the day that I want to go over stocks that you guys are specifically interested in and what I see with each individual name. Hopefully you got something out of this video. If you did, hit the thumbs up button. If you did not get something out of this video, or if you would appreciate a different way of explaining things, go ahead and hit the dislike button and go ahead and comment under the video to give me some sort of suggestion or guidance as to what exactly you guys are getting or not getting out of these videos. Thank you, and hopefully we will see you on Sunday.